Okay, I got you, T. I got you. I got you, boo. All right. Okay, let's make sure. Okay, guys, great. So we are live on YouTube. Okay, so great. So tonight, again, guys, we're going to cover. Okay, I got you, T. I got you. I got you. All right. Ooh, let me get that background here. Okay, let's make sure. Okay, guys, great. So we are live on YouTube. Okay, so I don't want to hear myself. Okay. So again, thank you for being on. If you're tuning in on YouTube, we're so glad that you're on tonight. Again, this is Team Wealth Builders. Tonight, guys, we're covering another look at the TWB strategy, which is a strategy that I helped to develop or developed here for our team, which is Team Wealth Builders. That's where it comes from. And we wanted to make sure that we had learned a strategy that was fairly simple for people to learn. And I think it is very, very simple. It was derived because there was a time when we were looking at many, many strategies, and a lot of people thought that trading was very, very difficult with having so many indicators and things of that nature. So we simplified this over, a couple of years of trial and error of me looking at different indicators and strategies and all that other stuff, and found something very simple that's based on price action. Okay, based on price action. So we're going to go ahead and share. We're going to take a look. I'm going to go over the TWB strategy, and then we'll go over support and resistance a little bit. Okay, so and again, remember, guys, this is an interactive call. You can feel free to unmute and ask me a question. I probably won't see you in the chat, so it's probably best that you do unmute so that I can see what you're talking about. So let's talk about this. Let me clear my screen a little bit, expand this. All right. So first and foremost, the TWB strategy, Team Wealth Builder strategy, is focused on really only 3 indicators. Okay, 3. All right. So the first part is we have an 8 moving average. This is the magenta line that you see right here, the 8 moving average. And if you're new to trading, if you're just understanding, again, please go ahead and look it up. But again, in the IM Mastery Academy, they talk about moving averages. And of course, the IM educators talk about it. But simply put, ladies and gentlemen, a moving average is just taking the high and low of 8 candles, okay? And it takes the average of that number divided in half, and it comes with this physical representation of where price may be going according to that formulation. All right, so we take an 8 moving average here. Then underneath it, we have this blue line, which is the 50 moving average, 50, okay? Both of them are simple moving averages, simple, okay? Now, I have in the past, I went and I used exponential. And again, guys, you can experiment with both. Exponential does move a little faster, but I decided I wanted to go back to using a simple moving average. There's really not a big difference in between. So experiment with both, see what works for you, okay? But that's the 2 things there. And then here on the bottom is called the average directional index indicator, or ADX is what is named right here, okay? So we set that to 12. I think it's defaulted to 14. So I'm going to show you real quick how we set up your chart. Basically, you will clear your chart and have a very basic empty chart just like this, okay? And all we're going to do is we're going to go to Insert Indicators here at the top, okay? And then we're going to look for moving average, which you see here under trend. You add the moving average, okay? It's already set to 50. We'll add that. Same thing. You'll go here, indicators, trend, moving average. You'll set the other one to 8. And then the last thing you'll do is you'll come to insert indicators. And then you'll come here to trend again to average directional movement index, average directional movement index. I'll select that. It'll have its colors here. As you see, here it has a plus DI. You'll make that a lime green, okay? And then you'll have your minus DI. You'll make that red, all right? The next thing you'll do, you'll come to this part here. It should be blank. You're going to add these levels. You're going to add 40, okay? Then you'll select add. Then you'll add a 25 level. You'll select add and okay. All right. Here in the parameters, of course, I keep this to a blue of some sort. Light sea green is what I have it. And I have it set to 12 and close right here. Apply to the close. All right. And that's all I do. I'll add that to it. So I'll go ahead and set my.
Sorry, can I ask a question?
Yes.
Is this chart in Meta 4 or is this Trading View? Where is
This
this
is
chart?
MetaTrader 4. This is my Trader's Way MetaTrader 4.
Okay, so you customize this?
I customize this.
Okay.
Okay. And I have this on my Hugo's Way. I also have this on an LMFX account. So regardless, you'll set up your chart this way. Okay. And then I'll come up here to save template. I'll save it. And then I title it TWB strategy, hit OK, and save it as a template. Okay. So guys, you're going to see how simple this is. Very, very simple strategy. Okay. And I like it because it's very simplistic. And so what you're looking for here is, again, the market moves in 3 ways, but you're only concerned with 2. And the market moves in an uptrend, downtrend, and it goes sideways or consolidation or ranging. Okay. Very simple with that. What I like about the TWB strategy is I like to keep it very simple to where your mind doesn't have to reason out a whole lot of different things going on in your chart. You've seen a lot of busy charts that have Bollinger Bands and PSARs, and then it's got this and it's got that. And that's okay. For every strategy, that you learn, that's a great thing that you master that part. But here for the beginning trader and for the advanced trader, this is very, very simple to get started and learn this. I mean, I teach people this. I've taught my daughter how to use this in probably less than 10 minutes. And I'm about to show you now how simple this is. So basically, your 50 moving average here is kind of like an equator. Okay. It separates the upper part, or I'll say the northern part, from the southern part. Okay. The northern from the southern. And what you're looking for is when this 8 moving average moves above the 50 moving average, you're looking for buys or the green candles. That's all I'm concerned with. I'm only concentrating on the green candles because this signifies price going up in a buy or going in a bullish direction. Okay. Obviously, the inverse is true. When it comes underneath the blue 50 moving average, all I'm concentrating on are sell candles or the red bearish candles. Okay. That's it. That's all I'm concerned with. All right. Now, the reason that makes it so simple is because, a lot of people like to trade pullbacks and all that other stuff, and that's great. But if we can get you to concentrate just on one color in one area and become proficient in that, guess what? You're going to make a whole heck of a lot of money. Okay. Because we're keeping it very simplistic. That all you have to remember is if you're above the blue, you're looking for buy candles. If you're underneath the blue, you're looking for red candles. Okay. That's it. Now, this helps us as far as trading. Now, even if I didn't have the ADX, you could use this all by itself just with that. Okay. This is just how good it is. Let me take this away for right at the moment. Let's take the ADX out. Okay. Now, even if I just did this, once this crosses underneath, okay, what I'm waiting for is a red candle to show up, and I could kind of jump in. Okay. What I'd like to do is see it close somewhere underneath this magenta line. So I could pick any candle. Let's say it crossed here. I missed this candle. I see this doji. I'm thinking about it, and I'm like, and so I see this red candle, and it closes underneath, and so I decide to get in. Of course, there's a pullback, but look, I would have probably grabbed some of this. And where do I get out? I get out once it crosses across the magenta line. So you could use just these 2 moving averages and do great trading by itself right there. Okay. Of course, the opposite goes true. Once it crosses over, okay, coming up, I could jump in on a green candle that closes above it and just stay in And, I could get out once it crosses back over if I want to do that. So I would have caught this. Of course, this would have pulled back. I would have made a few pips here and it would have closed me out. But let's say here, this green candle closed above it and I stayed in and it rode up here. I would have caught some of these pips. So see, this can be effective just by itself. Same here. This crosses on top of the green candle. This one closed above it. Okay, this right here. And then I could have stayed in. As long as it stayed above my magenta line, I could ride it up. Okay. And then I probably could have gotten out here once it crossed over. Once I seen it close underneath it, I would have got out. Well, by this time I would have made some pips. And let's just measure that just because, just to see. Let's say I got in here. Let's say I wrote up here. That's 60 pips. Just right there, just using just the moving averages alone. Okay. So that's the simplicity of it. Now let's add the ADX in and I'll show you how we fine tune our entries and exits. Okay. So actually, let's see. Can I expand that? I'm gonna expand it just a little bit so we can take a closer look. Okay. So now we're looking at this. So how we use the ADX. Think of the blue line right here that you see, this light sea green. This is going to be the strength of the trend that we're in. Okay, this denotes the strength of the trend that we're in. We have levels 40, okay, and 25. And what I do is I break these three areas that's divided by these lines into three main areas. The low area is a low signal strength area, low strength. The middle is a medium strength, and the top is a strong strength. Okay. So what I'm looking for is I'm looking for the blue line to touch this 40, either be close to it, okay, or go above it. Of course, I would love it to go above, but there's some pairs that you'll find, ladies and gentlemen, that are pretty weak. They're not as strong as maybe a JPY pair. Okay, so a lot of them just hover right around the 40, and that's okay because that's hovering right between the medium to strong. Okay, and that's fine. All right, the next thing I'm looking for is the green line here signifies the signal that matches with your green buy candles. Okay, so you want your green to be somewhat close to the 40 or over the 40, which lets me know that this is in a strong trend, in a buy trend. Okay, because both of these are high. The last thing I want to see the opposite signal, whatever it is, which is red, okay, which is for our sell. That's why my candles are colored green to match my line here and my red to match the other signal line. I want to see this one flat to the bottom. I want to see it as close to zero as possible. I want to see a gap in between this green line and this red line. Okay, because what lets me know is that green is strong. It's in a strong trend because of my blue line telling me it's very strong. And I see the green signal line touching or over the 40. And then I see the red all the way to the bottom. So what that lets me know is this is in a strong buy. And it also lets me know I'm not really worried about a pullback. Okay, so now when I put it back here, let's put this all together. Okay, let's put it all together. There's kind of a 1, 2, 3 confirmation that we're looking for. First confirmation is that if I'm looking for a buy, I'm looking for my green candles to be above the blue 50. Okay, that's what I'm looking for. It's above the blue 50. We're in the buy area. That's great. The second thing I'm looking for my blue line to touch the 40. It can be just touching it or go over the 40. And then the third, I'm looking for my green line to be close to the blue line. I'm looking for these two to be very close together, just like this is doing. Okay. And then I'm looking for my red or opposite signal to be to the very bottom. Okay. So where do I enter? That's what we all want to know. Where do I enter at? So I'm going to enter when this blue line, okay, let me move this over, starts to cross over. So let's say right here, I start seeing it come over. And so that means I'll get in somewhere. All right. So I can get in on this candle right here. Okay. Now, this isn't a lot of candles, but look, when I get in, let me see, I'm on a 15-minute. Okay. So when I get in, I don't have any red candles in between here because it's letting me know that the strength is pretty strong. So I can sit in this for a little bit. And let me see how many pips that is just on this particular one. If I got here on the bottom, wrote it up, let's say it hit the top. It's not bad. That's 23 pips. That could be $23. That could be $230. That could be $2,300. Just depends on the size of your lot size and what you have in your account. Okay. So that's one example there.
I have a question right here, please.
Yes.
Okay, so you know how you just did that measurement and you said that's 23 pips.
Right.
Okay, so on the last call, I asked you if there's more than 10 pips, like 20, 30, can we get in and out, you know, like 20 pips 2 different times and increase the lot size, right?
Yes.
Okay, so on the second time, so if because I'm someone that would be more interested in doing that. So if I was to go out, if I got my 10 pips, went out, and I went back in the second time, would the second point entry pull me back more or a lot because I entered in at a different entry price? Does that make sense?
Would it pull you back?
Yeah, because you know, like if the entry price makes a big deal, and this is and right here we could catch like 20 pips. So I go in, I get my 10 pips, and I'm happy with that. And I see that it's still writing, so I go back in the second time. The second time that I go back in, will that pull me back a lot because I went in that second time at a different entry price?
I mean, that's going to depend if you get in on a pullback. If you get in on a pullback, it'll pull you back. But if not, the biggest thing why this strategy works very well is because the momentum is in your favor. This is like a running river. It's kind of like if you jump in at the mouth of the river, you're just going to be going with the current. So you shouldn't have any drawdown, or you shouldn't be going negative. So let's say we go 10 pips here, we reevaluate it, it's still going up. I jump in 10 pips, I'm immediately going to jump back in profit, and it's going to probably go another 10 pips and hit my take profit just like that. And then I reevaluate it again, and I think maybe I could go in for a third time. Momentum's still in my favor. I'll jump in. I may, go right into profit. Okay, that's an example kind of here. I'm just using examples. Let's see. Just real quick. Let's see. So see if I get in here. Yeah, I would have a pullback right here. But here's some other things that you're going to learn is that this magenta line serves as a support area. Okay, it serves as a floor. You see, it doesn't break it. It just continues to ride it. Okay. What I want you to know about this strategy, why it works well, is because this is built on price action and momentum. So price action means that you're really just going on the price increasing. You're getting in and you're just concerned about the candle going from a low to a higher price. And you're going you're just going with the flow of it increasing. You're not really taking support and resistance into account right at this moment. You're just concerned about price growing in your favor. But the ADX helps you with the momentum. And the reason why momentum is strong is because as volume and volatility starts to go faster and faster and faster, it works on your behalf. It's like a snowball rolling down a hill. If you jump in it, you're going to just roll with the momentum and get bigger, bigger, bigger. If I can show you ways to catch momentum or catch these waves, then guess what? You'll have little drawdown and you're going to go into profit very quickly. And that's what a lot of us really want. A lot of us want to, you don't want to jump in a trade and wait for 50 minutes and you're going backwards and you're dancing around for, oh my God, you're like, oh my God, I'm -5, I'm -10, I'm -8, I'm -6. When is it going to go into profit? If you catch this when momentum is on your side, a lot of times when you get into trade, you're going to immediately start going into profit, and the transactions are going to move pretty quickly because you're getting this at high volatility, at high movement in the market, and it's in your favor. Okay. A lot of times, guys, when I'm shooting for 10 pips, 20 pips, I'm usually not in a trade longer, honestly, than about anywhere from 10 to 20 minutes. It usually goes by pretty quick. And sometimes it's even quicker than that, depending on the pair and the time of day. I mean, I've gotten 10 pips in less than maybe 3 minutes. It was just in my favor. And then I would jump in again. And next thing I got my 3 or 4 trades done for the day, I'm done. So in a whole half hour, I would get 30 pips and then I'm done. Okay. Or 40 pips or whatever I'm shooting for that day. Okay.
Well, you said something on that. Are you a scalper or are you a swing trader video that made a lot of sense, where you said if you're someone that's more like a scalper, and that's what I figured by watching that video, and thank you for doing that, because now I know I'm a scalper. I'm impatient. I like instant gratification. I want my money now. I don't want to be in a trade all day long.
Awesome. So the great thing about this strategy, guys, is you can use it on any time frame. You can trade on a 1 minute. Still works just the same. Okay. You use it on a 5 minute, which that's where I originated it. When I was doing 10 pips is easier gotten on a 5 minute time frame. So I would use this, get my 10 pips, get out. And I wouldn't have to wait, but maybe two candles, which would be 10 minutes, and I'm in and out. Okay. And so I could get, another trade and see, like right here, let's say right here. Okay. Let's say I got in here and I'm on a 5 minute chart. I jump in here. Let me see. I'm at 10 pips right there. Okay. So that means I would have waited for 5-10 minutes to get those. And then the next candle, let me see. I'm at 18 pips. Okay. So at least within 5, 10, 15 minutes, I've gained about 18 pips. That's not too bad. If I stay in longer, I would have got my 20 pips over here. So let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So, on this particular pair, I would have had to wait a few minutes if I was going for my 20 pips. Okay. But that's still pretty good, instead of having to wait 2 hours, 3 hours, things of that nature. Okay. This is great for the swing trader. Not only do you get more pips, but when you see it on a bigger scale like this, it even works more in your favor, because now you have more pips to get. So let me move this out the way. So right here, I jump in this same one. Let me see, I'm on an hour chart. Yeah, I'm getting 60 pips, or let me see, 74, yeah, about 75 pips, 74 pips, in a few hours. But look, if you look between here and there, how many red candles are in between all those green candles? Latia, count for me, how many red candles do you see? Or anybody can answer.
None.
Well, I mean, from down here all the way to the top of this green candle, how many red candles are in between?
Is that 4 or 3?
I see 3.
3, right?
1, 2, 3, 4.
1, 2, 3, 4 candles.
Yeah.
Oh, okay.
4. Yeah.
All right. Now count how many green candles from where I started to there.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11.
Mm-hmm.
Is that 12, 13? Wait a minute.
So out of 11 to 12 candles, I have 4 small candles that pull back. But guess what? I never have to worry about jumping out of the trade. It takes my fear away for two reasons. Okay. Number one, I'm still above my magenta line. Okay. I could have gotten out here. Let's just say you said, you know what, I'm getting out. But I wouldn't have got out because look where my blue line is. It's way up here. It's telling me that I'm in the heart of the strength of my buy. So even if it pulls back slightly, I have no real reason to get out because the strength is in my favor. The green is way up here over the 40. Look where my red line is. This is telling me that my sell signal is very, very, very weak. So even if it pulls back, I don't have to worry about getting out because it's so weak. It's not gonna change direction. Okay. And then the next thing is look at the space. This is one thing too. The space between this magenta and this blue line is big. So this is letting me know it's at a strong momentum because it pulled away from my 50. Okay, so that's another reason. It's close here. Okay, you see it's kind of consolidating, but when it pulls away and the strength increases, I mean, I'm catching a wave. It's like surfing. I'm starting to catch the up wave. And this is where I make the majority of my pips. And even here, this was what, 60 pips? Just the majority of that. How many times could I have gotten in this trade just on this momentum with no red candles in between? Look at that. I have what, 55 pips? I could have gotten this 5 times on my growth chart with no red candles in between.
Are we looking at a 15-minute chart?
No, that's an hour chart.
Can you give an example on the 5-minute chart, please?
I can. Actually, let me go to my favorite pair. I love my
GJ.
Hey, you got. How'd you know that?
Because I've stalked you on YouTube.
Woo-wee. All right, let's look at our GJ. So since you studied that, tell me, why do I like GJ?
Because Japanese candles have really long wicks, and you know that on a Japanese candle, you're more likely to get your pips on that one candle.
Absolutely right. Absolutely. Okay, so this is pretty much same, just like the chief right here. All right, so we identify, okay, let's say a potential entry right here, okay, where it starts to come over the line here. I'm above, let's see. All right, cool. So I'm already above my 50. That's good. My green is above my magenta. That looks good. So I may enter here. Okay. And now look at the strength. This blue line is up here. So I have no reason to get out of this trade as long as it doesn't cross over this magenta. So I would have rode it all the way up here to where this red line crossed. So let's see how many pips that is. And I'm on a 5-minute chart. So it takes 5 minutes to make each one of these candles. Right here on a 5-minute, that's 33 pips. So I would have been there. Let's see, for 1, 2, 3, 4. So that's 20 minutes. 1, 2, 3, 4. 40 minutes. 1, 2, 3, 4. We got what, an hour and 10 minutes. 1, 2, 3. Hour and a half, roughly. Okay, and I would have got in this over and over again. But now again, these are kind of shorter candles because we're not at our volatility time. Another thing that I talked about is you want to find the times where the market moves the fastest for you. And if you can trade in that, you're gonna have just great success with that.
Oh, excuse me. So right now, what is it, like the Tokyo Sydney session going on right now?
Mm-hmm.
So then we would look at AJ then, right?
Yep. Mm-hmm. You can look at
You want to
that.
look at AJ?
Well, first, let me go ahead over this. Now, when you see all these colors together starting to converge, what is this? What do you think, Latia, this tells you?
That we're about to start consolidating?
Absolutely right. When you start seeing it all jumbled up like this and it looks like a mess, stay out of it because it's a mess. And that's how simple it is to read this, guys. It's not a lot. You just glance at it. If the momentum is on your side, you jump in. See, like right here, look at this cell right here. Okay. the momentum came here. Now, true, you could have entered here because some people like to enter, early on when it crosses. Again, it's how you decide you want to do it. Maybe you decide to cross right here. But when I see the momentum start going on my side, the strength of it gets stronger. I could have caught this right here. Could have caught this wave.
So if you were looking at this trade when it was going on, would you would have gotten to it on the second candle or the third candle?
For me, I like to wait when my blue line goes over. That's me, but some people tend to go, a little sooner. So I might have caught this late. I probably would have caught it right here on this candle. Let me show. Let me see. I probably caught it on this candle right here. Okay. Probably would have seen it, would have rose. I said, ooh, this kind of look good. Let me jump in. I'm looking for 10 pips. That's my 10 would have been on this candle right here. Could have got in again. Let me see. 20 was at the end of this candle. So 2 trades right there. Okay. Momentum might have still been working. I could have gone in and rode that pullback. Who knows? If so, that's 30 right there, at least 3 times. And when I start seeing the colors come together, you see how this down here, how this green is starting to come up. See, getting closer to the medium strength or starting to come up. It's kind of a telltale sign that maybe I don't want to push my luck. I want to kind of get out. I also see my blue momentum line starting to come down and decrease. So it's probably letting me know that it's going back into consolidation of some sort, or could be potential reversal, because once this crosses, this is where the reversal kind of happens, when the red and green cross. This is kind of where it's starting to change direction as a clue. Okay. So that's really all there is to it, guys. That's it. You're just looking for looking for the best trades. And that's the thing too, is this helps me. This is what I tell people all the time. It helps me from getting into stupid trades. Oh, that looks really good. I'm just going to jump in. Instead, let me jump in when the current is in my favor. It cuts my risk down. I'm telling you guys, when I first started practicing this strategy, I remember, and some of you kind of remember when I started introducing this to you, I had about 68 straight trades and no losses. All because I was just very conservative, just making sure my ADX was where it was. I just made sure everything looked good, and I would jump in for my 10 or 20 pips or whatever I was shooting for. I think I was doing 14 pips at a time, and I would do it 14, and I would just carefully just jump in. And I wouldn't get into you could use this as often as you want. You don't even have to use many different pairs. You could use the same strategy on a lot of pairs, because look how many times the ADX rises. This is one here. Could have caught some of this. Look right here. You could have caught this. Right here, you could have caught this. I don't have to go to a lot of pairs. I just need to look for it. And let's see, this one right here is for a sell. Come here. Here's that one's under. Let me see. You caught this. This looks like the market just opened. This is a gap. So could have caught that gap. See, could have caught some of this sell right here. See where the ADX. So all I'm looking for, when I can have multiple charts up. Let me use it as an example. Look, and all I do, this is what I do. I literally do this. I have my charts up, and all I do is I open it and I look to see where my ADX is. I look, I say, ooh, this one is over. Let's see what's happening up here. Well, I'm not going to jump in this as a buy. Why? Because it doesn't look together. It's not over my my magenta line. Okay, and all the colors seem to be converging together. See how my blues pointed down, my red and green are all coming together. That's probably going to jump into consolidation. Boom, I'm off that one. Don't have to waste time with that. Boom, I open this one up. That one's all together too. Looks like consolidation. Don't need to jump in that. Let's pop this one open. Same thing. Okay, let's pop this one over, euro odd. Okay, this one, blue line is up. See, it's tilting up. Green is here in the middle. My red is tilting up. I'm still above. This one I may look at. Okay, what I'm looking for is it's pulling back what I would wait for is it to pull back to the magenta line and then go back up for a buy. So that's a good thing because I can catch it on the pullback so I can gain more pips as long as it stays where it's at. If it doesn't stay where it's at, then okay, I don't get in that trade. Boom, I'm off that. All right, let me look at this one. Open that up. Chief. Okay, let me pull it all the way to the end. Let me get on the 5 minute. Okay, I'm on a 5 minute. Okay, it's all together. Consolidation. No need to pay attention to that. Boom, let's go to that one. You see what I'm saying? See how quickly I can go through without having to spend a lot of time? That's why I love this strategy. It's very simple for the eye to train yourself. The more time you spend with it, the better you're going to be. Okay. So that is the part on the TWB strategy. And again, guys, in the Team Wealth Builder channel, we have 2 videos that are very detailed on this strategy. And we actually show trades that we've gotten into and great potential setup. So this is really just a refresher recap. But I'm going to add another piece just for Latia. And we're going to talk about support and resistance, because what makes you great with this strategy is I've always talked about support and resistance. It trumps all indicators. Okay. It's kind of like the brick walls, or it's kind of like on a highway. It's kind of like the outer walls on the highway. You can't bust over those concrete walls. Well, it's the same way here. Even though your indicators may point a certain direction, you still have to respect support and resistance. Okay. So I'm going to switch and we're going to go to trading view and we're going to talk about support and resistance real quick. Let's see. Everybody good? Everybody's okay?
Wonderful.
Okay, good. All right, let's get into support and resistance.
I think the most helpful thing for me that I got from that "Are you a trader?" or swing trader scalper video was, if you're someone that's looking for 10 pips, you shouldn't be even trying to mark up your charts on a 1 hour time frame.
Right.
What are you looking at it for?
Absolutely right. All right, so we're going to go on a 1 hour chart, naked chart, and we're going to talk about support and resistance. Okay, just to be a refresher.
So does that mean if you're marking up a chart over 5 minutes or 15 minutes that you want more than 10 pips?
Mm-hmm.
Is that what that means? Is that what she meant?
According to his video, he said if you're trying to get like 50 pips, then you shouldn't look at the 15-minute time frame. You should be looking at like the 30-minute or the 1 hour. And if you're going for like 80 plus pips, then you should be looking at the 4 hour or the daily. But if you're just like me and you're trying to do your 10 pips and dip all day long and just increase your lot size, then for me, I should only be marking up my charts on the 5 and the 15-minute charts. I didn't know that at first.
Oh, okay. Well, that's new to me, like it all is, but
Mm-hmm.
that's more notes I'll put down. Thank you.
Awesome. All right. Thank you. Thank you. All right, guys. So support and resistance. Okay. Merely support and resistance is just the high and low of where price goes in the course of that particular time frame. Okay. The high and the low. Okay. Not only is it the high and the low, but it's the high and the low in at least 2 or more places. High and low in 2 or more places. We identify support and resistance by looking at 2 to 3 different distinct points where the market has generally turned around in a particular area. Okay. The way to remember support is like the support beams of your home or your floor, or in your apartment. It's the floor where you're jumping up and down, and it's supporting you so you don't bust through the floor and go to the basement or the ground floor. Your resistance is your ceiling. Okay, is your ceiling. Now, a cheating way that I use, an easy way to mark support and resistance is, you see, I went from candles to a line chart. Okay, because the human eye is a lot easier when you can see lines than it is the candles with the wicks. Okay. So here, Latia, I'm going to use you. Okay. So do you see where kind of just instinctively you kind of see an area right around here where it seems like these lines just, it doesn't go past a certain point?
Right. It looks like at that 109 level.
Uh-huh. So right around here, right? Okay. So do we call that a support or resistance area?
Support. Resistance.
Okay. Resistance.
Resistance.
That's the
I'm
high
firm on
point.
that.
That's okay. We're going to keep practicing until we get it. Okay. Underneath, we can also go here. Okay. We can also go right around here. Okay. Now, this is subjective. Okay. Not everybody picks the same points. Okay. And then this is a line for us to refer to, just the individual trader, but really it's a zone area. It's really not one area. It can be anywhere around here. Okay. It's never exact. But what we notice is something's going on in this area. Something about when price gets to this area, people get a little skittish, get a little envious, get a little greedy, and say, man, the price is high. I'm going to start selling. And the sellers take over from the buyers and they start pushing the price. But then it goes down here and the buyers say, no, 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 no. That's low enough. We want to keep pushing the price up, and they push it, and it says, no, no, no. Sellers are like, nope, this is high enough. We don't want to pay higher. And then it pushes it down. And so we see that there's 1, 2, 3, 4, 5. We can consider this maybe 6, 7, 8, 8 different places, maybe 9 over here. Okay. So that is the area to be concerned about. And when you're trading, it's really just what I've always talked about is just a pattern of human behavior. That's all trading is. It's just a record of human behavior. Humans do things in patterns. I could follow you all day long, figure out what time. If after 3 days, I could figure out what time you wake up, probably around the same time in the morning, probably do the same things that you do every morning, brush your teeth around the same time, probably go in the bathroom the same time, probably eat the same things for breakfast or similar. You know, whatever it is that you do, we move in patterns. Well, guess what? Trading is the same way. And all we're doing is identifying patterns in the market so that we can make educated decisions on where we believe price may go. May go. Okay. See? So we put lines there. So remember, the higher line is resistance. The bottom line is support. That's the floor. But guess what? Once you break through that area, it's like the floors of an apartment. Okay. Your ceiling could be your neighbor's floor, right? Because to them, they're walking over your head. But to you, that's your ceiling. So you take the broom, they make a noise. What are you doing? You hitting it on the ceiling. Boom, 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 boom. Well, together, what do? They stomp them with their foot because that's their floor. See, so that's really all support and resistance is. Let's put some numbers here. I always like to kind of do that, kind of make it a little easier. Let's see. Let's do first floor. Cool. Oops. Everybody good? All right, real simple.
I think someone asked you a question or said something.
Yeah, go ahead. Anybody can ask a question. And then we'll make this last one. Fifth floor. Brother man on the fifth floor.
Mhm.
Okay. Okay. Fifth floor. Fourth floor. Third floor. Second floor.
Is this the basic trading view? Like
Yeah. Mm-hmm.
it's not GoPro.
No. Okay. Now let's move that. Okay, guys. This is all trading is all you're doing is identifying the trend, which means are you going from the bottom, from the first floor and headed up like on an escalator, or are you coming down off the escalator to the first floor? And all we're doing, guys, is we're just trading in between these floors. Our take profits are anywhere in between these floors, whether it's 10 pips or 20 pips or whatever it is that you want to do. But every time you break a floor, it changes this from a support to a resistance or a resistance to a support. Because just like a tenant in an apartment, for some people, you know, this is their bottom floor, but then just, you know, right here, this on, if you're on the second floor, this is their bottom floor, but to the first floor person, this is their top floor. And that's all support and resistance is. That's all. And you can change the words, support and resistance, floor and the ceiling. That's all these are floors and ceilings, floors and ceilings. That's all. You're just trading in between floors and ceilings. And you using whatever indicators you want to use, whatever strategy you want to use, you just want to determine, is it going from the fifth floor down to the fourth, down to the third, second, or first, or vice versa. You see how it goes in between? That's it. It's in between each of the floors. And guys, this is all marking up a chart is. That's all it is. It's just marking up the floors. So let me pause there, especially for Latias, because I know you wanted to recap. Do you have that part down, Pat, yet?
You are so shitty.
I'm
Yes.
not saying, I'm just trying to make sure you fully understand it.
Yeah, well, I mean, to be honest, I'm gonna watch this video probably 20 times or maybe 30.
Okay. Well, let's hammer it out now so you have a good thorough video. What is it that you may or may not understand?
Can you switch the lines for me and put it on a different candle? That's what confuses me.
What's that?
Looking at it with those candles.
Okay. All right. So great question. So, or great perspective there. Okay. So when you're looking at a trade, the only way that you make money is when it is trending. Okay. When it's trending, it's going to uptrend or downtrend. That's it. That's the only way you're going to make money in this thing, is when it goes from down to up to down. Okay. That's it. Your job is just to determine where it's headed. Okay, where is it headed? So as you get better at this thing, okay, and you're looking at the different floors, the market, what did I say? It's only going to move in 3 directions. So what happens is, you know, it starts buying. All of a sudden, this is some news right here. News hit, and a bunch of buyers buy it, and it shoots the price up. And then it comes up, and then it gets to this area, and it doesn't break through that area. It comes down. So the question that you're going to learn, or what you'll need to study, is, well, how do I know it's coming down? Well, there's some clues, and that's what you're going to study in your IM Mastery Academy. This is what you're going to do your homework on, is the candles kind of tell you what's going to happen. Okay? It's going to give you a clue. You start seeing these candles, and you start seeing this green candle with a wick on top getting kind of small, and then you see this red candle with a wick on top. Well, when you start seeing these 2 wicks together, opposite colors, that's a clue that's possibly going to turn in the opposite direction. If it turns in the opposite direction, then where else could it go? From the 5th floor down to where, Latia?
4th.
Exactly. That's it. And guess what happens? We got a doji candle here. Okay, so you're going to learn what that is. And then you have another green candle and they got 2 wicks. Okay, so when you see 2 wicks together like this and it's opposite color, especially a doji, because a doji candle kind of signifies indecision, okay, or that it's slowing down in the market. When you see that, then it looks like it's going to turn around. Well, if it touched the 4th floor and it's going to turn around, where else could it head to?
Down.
Well, no, if it turns
Once
around,
it turns around, it will go back up.
back up to which floor?
The 5th floor.
Absolutely. So all you're doing is trading in between the floors. Okay. As you become, now you see here is just dancing in between the floors. So eventually this is going to do what we call a breakout. It's eventually going to stop hanging around the 4th and 5th floor. It's eventually going to break through, which is exactly what it did here. Okay. So when it breaks through a floor, this is a common practice in most pairs. It's going to break through the floor and then it's going to retest. Okay. It's going to do a break and then a retest. Okay. That's what it's going to do. It's going to break. Then it starts to test it. It's trying to see, is this floor really sturdy? Maybe we might want to break through. Well, guess what? This red candle broke through. This green candle retested it with this. And this red candle formed and pushed away. It retested and it continued down. So this was the retest. Okay. Came down. All right. Broke through again. You see this doji says, oh, something might happen. But a green candle didn't form. If a green candle had formed with another wick, we might have thought it was going to go back up, but it didn't. It broke through here. And this was the retest. It came down and touched this again. It retested this area, didn't break through, came back on down. And then boom, came through. We say, ooh, we're excited, but we have to wait for what, Latia?
I don't know.
After it breaks through, what are we waiting for?
For it to retest.
Exactly, waiting for the retest.
So something else that had me anxious about or feeling nervous about this support and resistance is when I would call myself marking up my charts and I would switch to a different time frame. Sometimes I would see my line, sometimes I wouldn't. So that would make me think that I had done it wrong.
No, I mean, if you go to a different time frame, I always tell people, mark up the time frame that you're actually on. Mark it up. If you trade on a 15-minute, well, mark your chart up on the 15-minute because that's where you're spending your time at. That's what matters. You matter about the support and resistance on that time frame.
Okay, so you just switched your time frame,
right?
And it was blank. So what were you marking your chart up on?
I marked it on a, what was that? I think it's an hour chart. Oh no, I did on a 4-hour time frame. Yeah, I did on the 4-hour.
Okay, so then that's normal.
Yeah. But if I was trading, I mean, if I'm on a 4-hour, I'm not going to use the 4-hour to trade on my 15. If I'm trading on a 15, I'm going to mark it on a 15. So let me erase all that. I erased everything. And if I'm going to trade on a 15, I'm going to mark it up on a 15 because this is where I'm going to be hanging out at. So I may mark it here. This was a high area right here. Let's go back. Let me find the easy way again. The easy way was I switched it to a line chart. So I don't have to worry about the wicks. See, a little cleaner. Go up here. I'll mark that real quick. I'll mark this real quick. See, I'll mark right around here. Maybe I'll do underneath here, maybe. And maybe I'll do something right around here. Okay. And then, like you said, I can switch it back to candles. Look how accurate that looks. See? Came down. Looked like it was trying to break through. It didn't. It kind of retested in this area. Green candle's coming up. I might want to jump back in this. Headed upward. So the thing I want you to know about why do we care about support and resistance? Why does it even matter? Well, it matters because we think of these like an intersection. And I know Miss Deborah, if she's still on, she remembers I was explaining that. It's kind of like if you're speeding to your house, okay, and you're going through downtown, wherever. Well, you know, if you're not on the highway, you take the streetway. Well, let's say when there's no lights, you can speed going 45, 50, 55 in between lights. But every time you come to an intersection, what do you want to do? You want to slow down because something may happen in the intersection. You have an expectation that something may just happen. Somebody might run a red light, might be a cop at the light, you know, it may switch on you. You know, you don't want to be caught in an accident. Well, that's what these support and resistance areas are. They are merely intersections. Okay?
And they're also speed bumps.
There you go. And they're all
and detours.
And detours. Thank you. See, so you want to pay attention to this area before you jump in, and you want to wait to kind of see, is it going to bust through, go over the speed bump and continue on? Because if it does, it's going to do a break and then a what, Latia?
Retest.
It's going to break and do what?
Retest.
That's it. That's what you got to remember.
Oh, did you want me to say that louder? Was that a coach thing? My bad.
No, you did it right. Good. Just
okay.
Just like that was good. So yeah, so you're gonna break and retest, and you're waiting for a retest to happen after it breaks through, and then you'll wait to see, is a green candle gonna go and test it. If it doesn't, okay, if a green candle breaks through and another red candle does not retest it and another green forms, well, that's probably your chance to jump in and go for another 10 pips. Okay. So
you explain it so easy, but I don't know why I get so much anxiety when it comes to support and resistance.
Yeah. No, not.
I've purchased 3 books on it and still I'm like, what?
Mm-hmm. It's okay. You just got to practice. See, okay, like this one broke through and look at this red candle. It retested. Okay. But then another candle with the wick here came. So you're still waiting. You see this green candle, it's not bigger than the red candle, so that's not a time for me to go. I want to be able to go when I pass this red candle. Okay. Because this area is an area like a speed bump area. This is an intersection because it's still saying something could happen here. It could consolidate. It could still turn around. Instead, when you're retesting, you want to go higher than what this red and green candle is. Right here, I want to pass it. So I probably wouldn't get on this candle. I'd get in on this green candle. Okay. That's how you kind of trade out of the retest. This pushes through. You see this retest. Well, you like, man, anywhere in this zone area, it could just kind of dance around and come back down. Let me wait. And that's the hard part. A lot of people don't wait. They just jump in and hope and pray. Yep. Retest. See right here. Here's one. It pushed through the market, came back and retested right here with this green. And then it formed this red again. Well, guess what? I'm going to have to wait to successfully pass this area right here. So because this green lets me know I need to doubt it because it may still shoot up. I don't know which way it's going to go. So if I'm looking for a sell, I wait for the red and I see the green with a long doji. I see this, with a long wick. I see this red doji candle with a long wick. This let me know, well, no, this thing finna turn around, but I still got to wait. So I wait till it breaks the low of these 2 candles. So after it breaks here, I could possibly get in. But look what it did. It fooled me again and came back up here. But then look, it dipped back on down. And so this is why I tell you over and over, you got to be familiar with your pairs and you got to trade at the right times. A lot of this right here is when the market has been closed. That's why it's consolidating like this. This is ugly. So most likely this is the times when, you know, it's really slow. And so that's why the market moves ugly. So I don't want to move when it's ugly. I want it clearly in an up or down trend.
So Shawn,
Yes.
so we're looking at this chart that you just marked up, right?
Mm-hmm.
If we're looking at this to say, okay, based on the trend, I know to stay in it that I could write it X amount of pips, right?
Mm-hmm.
When you're looking for the trend, how far left are we supposed to look?
How far left?
Yeah.
You don't have to go far. I mean, really, whatever's in your screen right here is all I need to look at.
So I don't see that on like this. So if you didn't move your screen over any more to the left,
Uh-huh.
from what we're looking at now, I don't see anything that looks exactly like that. So how would I be able to follow the trend? Because where your arrow is pointing north, that's where we currently are right now, right?
Right.
That's what the market is doing right now.
Uh-huh.
So if I wanted to say, okay, based on where we are now, I could ride this for however long,
Mm-hmm.
but I have to follow the trend. I don't see that.
This is the only area I'm concerned about. That's it. I don't really care about any other part. This is it. This is what's determining my trend. Because these 15-minute candles, this was in the last couple hours.
Mm-hmm.
But what really determines your trend is in between your support and resistance area. So it's really not even that part. It's really just this. This is all I care about. This is a trend. This was a downtrend right here. Okay. This is now headed, so far, it looks like it's headed in an uptrend. See what I'm saying? The trend doesn't have to be all across your chart. It's just the area that you're immediately looking at in that zone, in this support resistance area. This is all I care about.
Yeah, I thought that I was looking for the same pattern, but from what you're saying, that doesn't matter. And when I say the same pattern, I mean, like I thought that I had to go back from like this time frame yesterday and see what the market was doing at that exact time.
Nope. You just care about what's happening right now, what's in front of you, the immediate information that you have in front of you. This is enough information to tell me something. So with this, yeah, that's it. It told me that it was up in a buy. It rejected in this area. It came back in a downtrend, or it could be a pullback. You know, if I looked, you know, if I wanted to take more information, and really, you know, you can look at it. So it was on an uptrend. You can kind of see that. Let me make that. It's in an all-out uptrend. Oops. Let me start here for 11.
So if it's in an overall uptrend, then we shouldn't look at this for a buy? Or would the overall be more like a swing trade?
Well, remember that let the trend be your friend. You know, you're in a, so far you're in an upward trend. See, so I'm looking for more buy. I'm looking for a buy here, but so far the highest that it's gotten right here. So even if this goes up in a buy any longer, this is where I figure it may go and then turn around. It may, or it may continue higher. You don't know. And that's the thing. I'm not trying to tell the future. I'm just trying to figure out what's happening right in front of me and make a determination there. I at least know that if this continues to go high, I need to pay attention to this intersection. It may speed through the intersection, or it may reject and turn. And even if it does, let me see. Let's see where we are now. We're on a 15-minute, even from where it is to this high. That's only 8 pips, nothing big. Okay. If it turns around, you know, from here back down, you know, potentially 11 pips. you know. So for a scalper, that's beautiful. That's like, oh, I can get 5 to 10 pips right here. You know, if it comes back down and I confirm that it comes back down, I could catch it back down again. You know, as you go bigger, you know, you start looking at a bigger trend. See? It's been on a trend for a while. See? It's steadily going up.
So you say you like JPY pairs because the JPY candle holds more pips?
Most yeah, all the JPYs, whatever pairs have more pips in it, but JPY moves the fastest on the London session. I love it because you could be in and I could get I don't know, some of y'all are on the call. We've been on London session and get what, 40, 50, 60 pips in a matter of less than an hour. So yeah.
I was under the impression that the only way to make any real money is if you're trading like US 30 or GER 30.
No. Nope. I mean,
it seems like you just got to know what you're doing.
There you go. That's it. You just got to know what you're doing. It moves fast. Everybody wants to jump in a race car, but they haven't mastered driving on the highway at regular speed. Okay, so any more questions about support and resistance? And remember, look, your trend line actually acts as a support. You see how I wrote this line and it hasn't broke this trend line yet? See, so this acts as a support within itself. And I'll probably start it down here is where the trend kind of started. So see, it pulled away from the trend. Now it's pulling to it. And sooner or later, it's going to break this line. And then guess what? It's going to go the highest that it can go. And then it's going to start heading downward. And then you get to ride that down. So for a swing trader, they'll love that because this will drop down. Okay. And they'll catch a lot of pips that way. Let me see even right where it's at. Let's see if it reaches as high. You know, that's almost 70 pips right there. It could drop. All looking at support and resistance. All is the ceiling and the floor. That's it. Just using ceiling and floor. And you could do this without any indicators. You see, I mean, this is all without, I haven't pulled out one indicator, but you could trade this uptrend. Just following these lines. Okay. Good. So guys, I won't cover the growth chart tonight. I'll cover that probably for next week. But first of all, does anybody have any questions about anything? Anything about the TWB strategy that we covered? Anything about support and resistance? Yes, no, maybe so. Everybody's good?
No questions right now.
Fantastic. Fantastic. All right, ladies and gentlemen. Well, again, if you're joining us on YouTube Live, we welcome you. We thank you for being a part of this. Again, this is every Monday night. We get on Facebook Live, YouTube Live, and of course, we're recording this here in our Team Wealth Builder channel. Please like, please subscribe. We want you to be a part of our trading family. And again, I want to tell you that this education, we're just supplementing the IM Mastery Academy. You know, this is a premier educational platform that you can join to go ahead and learn all the basic fundamentals and simple to medium to advanced strategies on how to trade the foreign exchange market, cryptocurrency market, binary options, oil, gas, you know, it doesn't matter. You can learn it all. And so we invite you to, you know, become a part of our family, to join the I Am Mastery Academy family. It's an honor to have each of you on. And again, please tune in for next week when we have another training. Okay. So with that being said, we will end the call.
Good night, you guys.
Good night, everyone.